This is Mac OS Ken.
Apple spends a positive quarter, though after-hours traders are not impressed. It is Friday, the 2nd of May, 2025. I'm Ken Ray, and this is news from Mac OS Ken, brought to you by yours truly and sponsored by Insta360's new X5. Get an invisible selfie stick when you buy an X5 standard bundle at store.insta360.com with code MacOSCan. This show is also supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/MacOSCan. Recapping Apple's second quarter fiscal year 2025 earnings and conference call. It was a good quarter for most of what Apple sells in most of the places it sells it. Was that thanks to folks buying ahead of anticipated tariffs? Apple's indication is no, and we'll get to that. In its earnings release, Apple posted quarterly revenue of $95.4 billion, up 5% year-over-year, and quarterly diluted earnings per share of $1.65, up 8% year-over-year. You'd have been forgiven for assuming that was tied to tariff buying, though Apple did have a fair amount of newness hit last quarter. In the press release, Apple CEO Tim Cook was quoted as saying, "We were happy to welcome iPhone 16e to our lineup and introduce powerful new Macs and iPads that take advantage of the extraordinary capabilities of Apple Silicon." Everything but wearables, home, and accessories was up. iPhone generated revenue of $46.8 billion, up 2% from $46 billion for the same quarter a year earlier. During the call with analysts, Apple CFO Kevin Perek cited a recent survey from Kantar that showed iPhone as a top-selling model in the March quarter in the US, urban China, the UK, Germany, Australia, and Japan. And people like what they got. 451 Research says here in the States at least, customer satisfaction for iPhone was at 97%. The Mac generated $7.9 billion, up 7% versus last year's $7.5 billion, driven by the latest MacBook Air, MacBook Pro, and Mac Mini models, according to CFO Perek. Cook highlighted the M4-powered MacBook Air, as well as the M4 Max and M3 Ultra-powered Mac Studio models. People dig those too. Customer satisfaction in the States was reported at 95%, according to 451. iPad generated $6.4 billion, up 15% versus last year's $6 billion, driven by the new M3-powered iPad Air. And it is still finding converts somehow and somewhere. Over half the people who bought iPad last quarter were buying their first one, according to the company. And they do dig. Numbers from 451 Research show customer satisfaction with iPad at 97% in the US. Services keep creating sonic booms. That segment generated $26.6 billion last quarter versus $23.9 billion for the same quarter a year earlier, up 12% year-on-year. CFO Perek said both transacting and paid accounts reached new all-time highs, with paid accounts and paid subscriptions both growing double digits year-on-year. As mentioned earlier, only wearables, home, and accessories were down, falling to $7.5 billion from last year's $7.9 billion, a drop of about 5%. Hosannas and Heyzannas from Apple CEO for the category. Cook said he hears all the time how important hearing health features in AirPods Pro 2 are to customers. Plus, the 8 to 10 people who have an Apple Vision Pro are getting all kinds of stuff. CFO Perek was a bit more pragmatic, pointing out that the March quarter of 2024 included the relatively new Apple Watch Ultra 2 and the totally new Apple Vision Pro. Nothing like those products last quarter, so yeah, a bit of a hit to wearables, home, and accessory sales. Still, the installed base for Apple Watch reached a new all-time high, with over half the people buying one last quarter showing up new to the product. Customer satisfaction for the timepiece in the States stands at 95%, according to 451. Doing a bit of globe-trotting, Apple revenue was up the world over, save one really big part. In the Americas, net sales hit $40.3 billion versus $37.2 billion for the same quarter a year earlier. In Europe, it was $24.5 billion versus $24.1 billion. In Japan, it was $7.3 billion versus last year's $6.3 billion. And in the rest of Asia Pacific, net sales hit $7.3 billion versus the $6.7 billion seen for the same quarter a year ago. Where net sales fell was in China. Could have been worse and may yet be. For the last quarter, though, net sales came in at $16 billion, down just 2% versus Apple's second quarter of fiscal year 2024. Now, we're not to the Q&A part yet, but it's worth pulling out an exchange between Apple CEO Tim Cook and Melius analyst Ben Reitzes. He'd have thought that a sense of nationalism in the Middle Kingdom would have hit Apple harder. Cook didn't address the nationalism angle, but yeah, they were only down 2%. Take away foreign exchange headwinds, and revenue was actually flat, according to the exec. Certainly better than the December quarter, when revenue was down 11% year on year. iPhone was the key driver of the improvement sequentially, according to Cook, though the Mac, the iPad, and the Watch are attracting a majority of customers new to those products, so that continues to look quite good in China. In urban China, Cook says iPhone took first and second for smartphones last quarter, while iPad took first and second for tablets. Now, cool as things were around the world, Apple CEO leaned hard into the amount of business and procurement Apple does here in the States. His prepared remarks practically started with that. Off the bat, Cook said, "We are proud to increase our impact around the world, including here in the United States, where we recently announced plans to spend $500 billion over the next 4 years. We're going to be expanding our teams and our facilities in several states, including Michigan, Texas, California, Arizona, Nevada, Iowa, Oregon, North Carolina, and Washington. And we're going to be opening a new factory for advanced server manufacturing in Texas. During calendar year 2025, we expect to source more than 19 billion chips from a dozen states, including tens of millions of advanced chips being made in Arizona this year. We also source glass used in iPhone from an American company. All told, we have more than 9,000 suppliers in the U.S. across all 50 states." Almost all of that he said again during the Q&A. Purely for the benefit of analysts, I feel certain. Perhaps trying to head off questions later, Cook did talk about the delay for Apple's more personal Siri. Work is going well, progress is being made, Apple looks forward to having those features out to users. All that said, Apple needs more time to complete their work so the features meet the company's high-quality bar. And they might as well go ahead and talk about tariffs too. For the March quarter, said Cook, Apple had a limited impact from tariffs as they were able to optimize their supply chain and inventory. For the June quarter, currently they are not able to precisely estimate the impact of tariffs as they are uncertain of potential future actions prior to the end of the quarter. As things stand right now, assuming the current global tariff rates, policies, and applications do not change for the balance of the quarter and no new tariffs are added, the company expects to take a $900 million hit to its costs. And seriously, that is just for the June quarter, which is its own special thing. That $900 million estimate should not be used to make projections for future quarters, according to Cook. Despite the overall uncertain environment, CFO Parekh did offer color at the total company level. By his account, Apple expects June quarter revenue to grow low to mid-single digits year on year. Gross margins are expected to be between 45.5% and 46.5%, including the anticipated $900 million of tariff-related costs. Operating expenses will be between $15.3 and $15.5 billion. OI&E will be around negative $300 million, and Apple's tax rate should be around 16%. Again, the CFO says that assumes that global tariff rates, policies, and application remain in effect as of Thursday's call, and that the global macroeconomic outlook doesn't worsen from Thursday for the current quarter. Having addressed that as well, CEO Cook said for their part, executives will manage the company the way they always have, with thoughtful and deliberate decisions, with a focus on investing for the long term, and with dedication to innovation and the possibilities it creates. As they look ahead, they remain confident that they will continue to build the world's best products and services, confident in their ability to innovate and enrich their users' lives, and confident that they can continue to run their business in a way that has always set Apple apart. We'll get to the questions and answers and Wall Street reaction in a moment, but first a word from today's sponsor, Insta360, and their new 360-degree camera, X5. Out for less than 2 weeks, X5 comes with a ton of improvements. It features 8K 360-degree video and enhanced low-light performance for all-angle shooting, day or night. Larger sensors deliver 8K video with amazing clarity, including night shooting that yields unprecedented detail. The lenses are made from a tougher optical glass, giving them superior impact resistance. There's a new built-in wind guard and an upgraded algorithm for consistently clear audio. It's waterproof up to 49 feet, or down to 49 feet, I guess. And it's got a 3-hour battery life. It's Insta360's most durable 360-degree camera yet, and you should give it a look. Head to store.insta360.com to see what they have, and use code MacOSKen for a free 45-inch invisible selfie stick with your X5 standard bundle purchase. The pole disappears from 360-degree footage, leaving people to wonder how you get the shots you got. It's a $24.99 value, but it's free for the first 30 people who go to store.insta360.com and buy an X5 standard bundle with code MacOSKen. Shoot every angle at once. Get your free invisible selfie stick when you buy an X5 standard bundle with code MacOSKen at store.insta360.com. As might be expected, tariffs were the topic du jour for most analysts. Morgan Stanley analyst Eric Woodring wondered about the mix of phones coming to the U.S. from India. For the June quarter, Cook says it will be most of them, while most Macs, iPads, and Apple Watch units will be brought to the U.S. from Vietnam. Since tariffs are based on the country of origin, bringing stuff to the U.S. from countries besides China should help Apple avoid the worst of Trump's tariffs. Meanwhile, devices bound for countries besides the U.S. will still be stamped Made in China. Woodring had another question, the answer to which, I'm sorry to say, is kind of hard to swallow. Pointing to a number of reports during the March quarter that Apple had pulled forward sell-in into the channel to get ahead of tariffs, Woodring wanted to know whether sell-in and sell-through paired up, and does Apple believe that consumers are accelerating hardware purchases to get ahead of any potential pricing increases, or was behavior normal? According to Cook, he and his don't believe they saw obvious evidence of a significant pull forward in demand in the March quarter due to tariffs. That's in contrast to a Bloomberg report from the first week of April that had an Apple employee saying that their store was slammed with people panic buying phones. Then again, the first week of April is the first week of the June quarter, so okay. Melius analyst Ben Reitzes really wanted Cook and Perec to say what happens after June with regard to tariffs. Neither wanted to do that, with CEO Cook saying, "I don't want to predict the future because I'm not sure what will happen with the tariffs, and it's very difficult to predict beyond June." Goldman Sachs analyst Michael Ng asked a question he kind of had to know Apple wasn't going to answer. Given trade policy uncertainty, he wondered whether Cook could talk a little bit about Apple's philosophy on pricing, particularly elevated costs. Cook says they're engaged on the tariff discussions. They'll stay engaged on tariff discussions. The operational team has done an incredible job around optimizing the supply chain and inventory, and no, nothing to announce on the pricing piece. JP Morgan analyst Samik Chatterjee wanted to know whether Apple Intelligence was still driving upgrades and adoption last quarter the way it did the quarter before. CEO Cook indicated that that was the case, and that performance for the iPhone 16 line was stronger in places Apple Intelligence was available versus places it was not. And finally, Arete research analyst Richard Kramer asked about the legal elephants in the room. Between Wednesday's Epic injunction and the Google antitrust trial possibly killing Google's default search payments to Apple, do Apple execs feel now that they have ample ways in which they might be able to mitigate some of the potential negative impacts on Apple services business should things go south in those cases? Pass, said Apple's CEO. Though not exactly. Rather, he said they're appealing the Epic ruling, though they are complying with the court's orders, and they're not going to talk about the DOJ Google case as it is ongoing. But yeah, the CEO did acknowledge there's risk associated with them, and the outcome is unclear. Now that's the big points hit, though there was more to hear. You can hear the call for the next couple of weeks on Apple's investor site. It'll be up as a podcast for the next couple of weeks as well. If you're more of a reader, 6 Colors has a transcript of the call, and thanks to them, as always, for making that available. Notes of confidence, strong performance globally. What's not to love from Thursday's call? Yeah, there's an answer to that question. Apple's wishy-washy response to analyst questions. iPhone sales beat Wall Street's expectations, said a piece from MarketWatch after the call, but Apple's vagueness around tariff impacts doesn't sit well with investors. See, they wanted answers about the whole year, but Apple wouldn't guide past the current quarter, which is the company's MO. Investors left the call unconvinced that the uptick in iPhone sales wasn't the result of a buying frenzy ahead of tariffs. Also, some numbers missed expectations. Revenue for services came in at $26.64 billion. Wall Street was looking for $26.7 billion. Greater China generated revenue of $16 billion. Analysts were looking for something closer to $17 billion. Really, though, Wall Street hates uncertainty. While Cook says they'll manage the company the way they always have, and while they remain confident looking ahead, Wall Street seemed to hang up the call with uncertainty. The MarketWatch piece indicates that led to a dip in after-hours trading. Shares were down 3.8% after hours, off a little over $8. They'll start the day today around 205.25. macOS Ken, brought to you by me, and sponsored by Insta360's new X5. Get an invisible selfie stick when you buy an X5 standard bundle at store.insta360.com with code MacOSCan. This show is also supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/MacOSCan. Advertising handled by Backbeat Media, online at backbeatmedia.com. You can reach me a couple of ways. info@macosken.com or call 716-780-4080. Until next time, that is news from macOS Ken. I'm Ken Ray.
Ciao.